Imagine a world where your money works for you, around the clock. A world where $1,000 hits your bank account every single month without you lifting a finger. It sounds like a dream, but for countless people, it's a reality. This isn't about getting rich quick. It's about building a smart, sustainable foundation for financial independence. Today, we're going to break down exactly how you can build a passive income stream of $1,000 per month. But first, let's get one thing straight. The term passive income is often misunderstood. It doesn't mean you do nothing. It means you put in the initial time, money, or effort to build a system that then generates income on its own. Think of it like this. A farmer has to plow the field, sow the seeds, and water the crops. That's the active work. But once the crops are growing, the sun and rain do the rest. The harvest is the passive income. So let's talk about three key strategies to start your passive income farm today. The first and most accessible is dividend investing. This is the cornerstone of passive income for many investors. A dividend is a portion of a company's earnings paid out to its shareholders. It's essentially a thank you for owning a piece of the company. To get $1,000 a month or $12,000 a year from dividends, you need to understand the concept of dividend yield. The dividend yield is the percentage of your investment that you receive back as dividends each year. Let's use a conservative and realistic example. A good dividend exchange-traded fund, or ETF, might have a dividend yield of around 4%. To calculate how much capital you would need, you simply take your goal amount, which is $12,000, and divide it by the dividend yield. So, $12,000 divided by 0.04 gives you $300,000. This means you would need to invest $300,000 to earn $1,000 in monthly passive income from this stream alone. This is not a small number, but it's a clear, tangible goal you can build towards over time. And remember, as the companies in your ETF grow, they often increase their dividends, meaning your passive income will grow over time without you having to invest more money. The second strategy is to leverage real estate. This might seem out of reach, but it's more flexible than you think. While owning a rental property is the classic example, it can be capital intensive and isn't entirely passive. You have to deal with tenants, repairs, and management. A more hands-off approach for many investors is to use real estate investment trusts, or REITs. A REIT is a company that owns, operates, or finances income-producing real estate. Think of it like a mutual fund for real estate. You can buy shares in a REIT just like you would a stock, and they often pay out high dividends from the rental income they collect. Many REITs offer yields of 5% or more. If you invested $240,000 into a REIT with a 5% yield, that would generate $12,000 per year, or $1,000 per month. The third strategy is building a digital asset. This approach requires more upfront effort and creativity, but less initial capital. A digital asset could be anything from an ebook or an online course to a monetized YouTube channel or a blog. The beauty of a digital asset is that you do the work once, but the asset can generate income for years to come. For example, creating a high-quality online course about a valuable skill might take a few months of hard work. But once it's created, every sale is a source of passive income. To earn $1,000 per month from this, you could sell a $100 course just 10 times a month. If you sell it for $20, you need 50 sales a month. It scales up from there. The number of sales you need isn't daunting when you consider the global market of the internet. So where do you start? The key is diversification and consistency. You don't have to choose just one path. Start by consistently investing a portion of your income into dividend-paying assets. As your capital grows, you can explore other options like digital products or even real estate syndications, which allow you to invest in large properties with a lower barrier to entry. Passive income is not a lottery ticket. It is a system you build, $1 and one day at a time. Your goal of $1,000 a month is not just a fantasy. It's a mathematical equation with a solution that's well within your reach.